Hello everyone. So we're going to have the last session of Seger webinar series. Today is the session will be brought by Kak Rifan Rahman with the title of the Dilemma of Financial Inclusion from Ethical Conundrum to Welfare Creation. So without further ado, Kak Rifan, the floor is yours.
Okay, I'm going to check on my voice first. Am I audible?
Yes, you are.
Okay, I'm planning to do share screen, so wait. How do I share my screen? Okay, can I?
You can just click the share or press
No,
Alt plus S.
unfortunately, it's not available. Yes, okay. Okay, can you guys see it clear?
Yes.
Great. I'll just double check. How many minutes do I have for this presentation? An hour, right?
Yes, 60 to 90 minutes.
Okay, okay. 90 minutes includes, is there any question answer session?
Yes.
That includes the 90 minutes.
Yes.
Great. Okay. So I'll just going to spend around 60 minutes for the presentation. And if you have questions, I'll be very open for the next 30 minutes. So yeah, ask me any questions. I'll be happy to answer. So good evening, everyone. Let me introduce myself. I'm Rifan. I've been debating for a couple of years. Yeah, I think more than a decade. such a such an ironic fact. I've been debating. I represented Institute Teknologi Bandung during my active year, and now I am. Yeah, I still do debate. I participate in tournaments for fun, and I was invited by Irene to be one of the speakers in Seger webinar, and I'm very happy to be here to meet you up with you guys and share my a little bit of my knowledge related to matter that might be very useful for your debating endeavor. Um, the matter sharing that I would be having today, as the title that you can see, is the dilemma of financial inclusion from ethical conundrum to the welfare creation. Um, Many of us might be less familiar with the terminology of financial inclusion because this terminology of financial inclusion is relatively new. I think that the terminology is given since 2000-ish, 2010-ish, after the vast growth of the non-banking financial institution um, in many countries, including developing countries. So they are talking a lot about financial inclusion. They are talking a lot about how are we going to enable individuals to play in financial instruments, be it as, for example, stock player, or to borrow some money in the industries that might be relatively unfriendly for those who are deemed unbankable, um, that might not receive any loan from bank in traditional way, in conservative way. Therefore, the terminology of financial inclusion does exist. I think that in Indonesia, for many of you, the terminology of financial inclusion is getting the hype now, especially in the last three to 4 years, because there are so many startup industries, such as Gojek, Tokopedia, and then Credivo, and many other things offer this terminology and this quote unquote service. Therefore, you can see pay letter. Tokopedia also provides the credit system, Credivo, and then right now there are so many supporting elements of it. We call it P2P lending, for example, P2P apps when you can, and even the bank system is trying to make the financial inclusion exist to them. That therefore, bank try to digitize themselves. We are now having familiarity of, for example, Genius, who makes financial transaction become so easy, and all of those things. So basically, that is the terminology of financial inclusion. Of course, financial inclusion is marketed and designed to be exciting, to be attractive, to be positive in some of way. But we need to question ourselves whether or not it is true that financial inclusion is as good as it's marketized. Therefore, we need to address two instruments and two elements that are fundamental here as a aspect to discuss in debating. First is the ethical aspect, and secondly is the aspects of material aspect, whether or not it is truly empowering in terms of creating welfare, especially for the middle to the lower level of society, because they might be the biggest question here, whether or not they are the victor of financial inclusion. So the first picture that I'm sharing is, of course, clear. It is the pictures of traditional and conventional banking, Citibank, HSBC, Barclays, and etc. I think we need to understand first that when we are talking about financial industries, generally financial industries are classified into three elements. The first one is bank, be it state-owned bank or private-owned bank. The second one is public fund institution. Oftentimes this is the bank one. There is a private bank, public owned, state owned bank, and also central bank. Of course, they have different role. Usually, state owned bank and private bank is a commercial bank and consumer bank, so they are designed for a commercial purpose. The difference is just who own the bank. But the third one, central bank, usually is the one who regulate the monetary decision. So when we are talking about the annual interest rate, when we are talking about the currency rate, and so on and so forth, the central bank plays a huge role here. Some of the central bank combines its role from fiscal to monetary role, while some of the bank, for example, the ECB, only talks about monetary role rather than combinations between fiscal role and monetary role. The second one is public fund institution. So public fund institution is that usually the state, when they are receiving money from tax collection, and many other things. And once they receive income, especially from tax collection, what they do is that they use this in order by investing the money. And when they invest the money, it is called as public fund institution. So usually public fund institution, in terms of percentage in a global scale, is relatively small. It might contribute for less than 10% in number. While the conventional bank contributes somewhere around 30 to 40%. So the rest of the 50%, something that is increasing very significantly, is a non-banking financial institution. So these are the financial institution, but are not regulated as bank. So there are many aspects of this, such as insurance, such as venture capital, shadow banking, money market, and so on and so forth. Stock trader and so on and so forth. So these industries, the second one, the second image on the right side is the example of venture capital. The name is SoftBank, but it's not bank essentially. Probably that's why they call it soft, because they are not necessarily a conventional bank. So they are the financial institution that are not bound to the regulations of conventional banking system. So if you guys are curious of asking me what are the differences between conventional banking and non-banking financial institution, the primary differences is about risk management or risk tolerance. So there are the reasons why conventional banking is regulated by the central bank, and oftentimes the regulation is quite tough. For example, I'll give you a simple example. If you want to ask for credit, um, you are going to receive conventionally, you are going to be checked into 5C component. For example, your character, whether or not you have a good track record as a person, your collateral, whether or not you have assets to guarantee your loan. And even when you have the collateral, oftentimes the collateral value that you can loan is only at maximum 60 up to 70% of your collateral. So for example, if your collateral has been reviewed by bank and also by the state agency, and the value is 1 billion rupiah, the maximum credit that you can take is only up to 600 to 700 million. So they are making sure that the loan is safe. And then not only that, you are also measured in accordance to your your monthly revenue. If you and oftentimes again, the number of installment that you pay must be at maximum 50 to 60% of your monthly revenue. So if you receive salaries for 10 million rupiah, you can only do credit that is maximum 5 million rupiah per in terms of installment. So this is, and not to mention that this might be changed if you have, for example, another credit in another bank, for example, your car ownership. And all of these factors are regulated very closely by bank. It's the situation that makes sure that the credit is safe. If you are unable to pay the credit, it's called as non-performing loan. The bank will not be collapsing, because then the bank has still an asset. It might be hard to be it might be hard for them to liquefy the assets, but the risk is manageable. And again, every single bank has their own regulation. For example, central bank puts a regulation of maximum NPL percentage, maximum non-performing loan percentage, and when bank fail to do this, their status will be reviewed. And if their status will be reviewed, there might be issues, for example, revoking license and many other things, and even being taken over by the state. Um, in other situations, for example, when bank gives financial service such as deposits, the deposits even being regulated by central bank. For example, in Indonesia, the per annum deposit that that is set right now is only 2.8 up to 3.2% per annum, which is relatively low. And they even make regulation. If banks sets their deposits higher than what the central bank sets, then the deposit is not guaranteed by the state. So assuming that the bank collapse and fails to give the payment, the state will not guarantee the return of the deposits, making sure again that the regulation is so tight to the level where it is safe, but it doesn't give you enough. It doesn't give you enough high return. High return. Again, the principle of low risk, low return, high risk, high return. On the other sides, non-banking financial institution is completely wild. These industries can do many things that beyond the limitations of of banking. For example, they can just give credit to anyone without any collateral, and they advertise it as you take loan as fast as 5 minutes. You just download the apps, upload your ID card, and then fill in some forms, and then you can take loan with certain amount. They take a huge risk. In return, this company, of course, put a relatively high cost. For example, if the average interest rate for banking for house ownership is somewhere around 12 to 9, average consumer loan is somewhere around 9 to 12% per year, at least the figure before the pandemic. This company, the non-banking financial institution, can do crazy shit number. They can do like 5% per month. 5% per month, which is literally 60% per year, 5 times larger than conventional bank. So what they do is they put risk to themselves. They give easy access for individuals. In return, they impose high burden to the individual. And this is the general characteristic of non-banking financial institution and conventional bank related to risk management. So when we discuss about non-banking financial institution and the terminology of financial inclusion, there are many study cases that we need to deep dive. One of the items that we see is the peer-to-peer lending, as seen from the slides. Okay, so if you may not be familiar with the terminology of peer-to-peer lending basically is simple. So the company becomes the marketplace of someone who has money, so they can put the money invested in a pool, and then this pool will be distributed to someone who needs them. It's this basically same principle with banking, because in banking, bank earns money from those who save the money towards that bank, and bank distributes the money towards those who are in need of borrowing money. But the terminology of peer-to-peer lending is basically newly advertised terminology, basically to say that yes, you put your money, you will directly be distributed, because there is no such thing as a hassle. There will be no hassle of bank prerequisite that is so hard for those who want to borrow money. So it's so easy for you to get it. You can check it by yourself, and that's why the terminology of peer-to-peer lending does exist. Peer-to-peer lending usually promises you quite a good margin of return. So in my experience, for example, in Indonesia, again, to make it more grounded, peer-to-peer lending usually gives you return somewhere around 12% up to 24% per year. Quite high, because if we compare it to the average deposits now, because deposit is the safest investment in maybe currently, if you want to invest deposit in bank, because it's guaranteed by the state, and there's low likelihood that bank will get bankrupt. The return is only 3%, so 3% per year. This one is 12 to 24% per year, so it can be 4 to 8 times larger. But there is a risk, because if you invest it there, but the non-performing loan is high, then the consequences is that the company might not be able to return your money fully, so you will get lost. So this is the area where we are discussing here. In aggregates, whether or not this will be beneficial both for the investor and also for the borrower of the service. I'm going to give one good study case here on the peer-to-peer lending. So this is one of the example, Assetco. Assetco is a peer-to-peer lending. Basically operates, the focus of this company is to distribute the money in one company, which is Akulaku. and Akulaku basically is a consumer credit. So there is a difference between productive loan and consumptive loan. So consumptive loan is a loan that is designed for you to do consumption. For example, you purchase laptop, you purchase phone, you purchase electronic utility. Those things are the consumptive loan, while the productive loan is a loan that is designed for you doing business. For example, you want to do business and the capital of it requires you to take loan. Akulaku is basically a consumptive loan, and this investment, this peer-to-peer lending is exclusively designated towards consumer lending. Of course, it means that the risk is high because statistically, consumptive loan is always higher, having higher risk in terms of non-performing loan rather than productive loan. Why? Because one, consumption can be impulsive. Two, consumption doesn't increase in value. So if they finally do not have money and they want to resell the product that they already purchased, oftentimes the product is product value is depleted and also depreciated rather than productive loan, because in productive loan you will get profit, and when you get profit, of course, it allows you to continue the lifespan of the installment, so the chance of performing loan is higher. Okay, however, this applications gives a very promising return up to 22%, right? What is crazier is that they promise you not only high return, but they promise you an insurance that your money will be returned at minimum 100%. So for example, when you invest 1 billion rupiah, the money will be returned at minimum 1 billion. So you will not get any loss. The only loss that you get is the opportunity loss, because maybe you can get your profit somewhere else with your 1 billion, but you just don't get profit. But you still get your money returned the worst. And they use insurance company to insure this, which is so crazy. It seems it's so safe. It's 100% return. The insurance guarantee 100% payment, and then it gives a very high, a relatively moderately high return. Of course, it's not as high as stock trading, for example, or even cryptocurrency, but 22% is still 8 times larger than bank deposit. The question is, how are they doing this, right? Is it too good to be true? And this is the way that financial inclusion makes the first dilemma, because the problem of financial inclusion and the concept of non-conventional banking is that the regulation is still very weak, unregulated, because that's the essence of risk tolerance, that what makes it seem so safe hides a very big mystery of risk. For example, in Asetku, the company that they invest, Akulaku, is Asetku is a company, and this company owns the share in Akulaku. Basically, they get the money and they distribute it to the platform that they own themselves, the same majority ownership. They get the insurance coming from Akulaku. So Akulaku insured that if their customers, I mean, if the borrower failed, they will guarantee to the Asetku, which is the same company, same ownership company in essence. So basically, in essence, the same company. They will guarantee that the money will be returned fully. In addition, Asetku also get the underlying insurance from insurance company named Stako Insurance. After I researched on Stako Insurance, apparently Stako Insurance is owned, the majority of share of the Stako Insurance is owned by Asetku. So the company who becomes the underlying insurance company is the company who is owned by the company by Asetku, which is so crazy. So those partnership who guarantee the payment is basically the same entity. Okay, so what will be the problem? The problem is simple. If one company collapses, the rest is collapsed. If your money is guaranteed 100% by the insurance, but the insurance is collapsed, then the guarantee is just a promise, right? And this is dangerous. Therefore, oftentimes in conventional banking, it is not allowed for you to finance your own company. For example, Bank Mandiri, when they give credit, they cannot give credit to company that they own themselves, because this is dangerous. This is dangerous transaction, right? They must give only to credit. They must only give credit to party that's neutral, that is not owned by their own company, in order to make sure that the neutrality and transparency is ensured. But this system is not existing in non-banking financial institution, and in this context is peer-to-peer lending. So more importantly, and of course this means that basically the regulator should see this, and this is quite open, it's so easy to be investigated, but Otoritas Jasa Keuangan OJK did nothing, do nothing up until now. What is even more dangerous is that the 100% insurance is actually for not allowed by OJK. So in Indonesia, OJK gives regulation that there should be no, that the peer-to-peer lending is not allowed to guarantee 100% insurance. 90% might be allowed, but 100% is not allowed, in order to ensure that the banking system, financial service, is not facing a high threat from this industry. Even with such regulation, they can still advertise this openly in so many platforms, even their own platforms, through giant billboard and etc. And OJK does nothing again, although they claim themselves that they are registered and supervised by OJK. So again, the questions would be, if they already bypass so many regulation, if they, even the legal one, and their structure of system is structurally risky, why then what will happen if they collapse? And by the way, up until now, they already operate and they already circulate cash flow for investment. They already collect money from public up to 11 trillion rupiah, which the number is so huge. It's like 10 times the current budget of KPK. So it's a huge number. And if we see on a bigger picture, this is a risk of collapse, and they might be, and if they go larger, they might be too big to fail. And if they already go too big to fail, then the state has no power to do anything, to bargain anything, because they can just impose so many high-risk businesses under the hope that they will be safe by the state the moment when they are about to collapse. Because if they are not safe, then public will be in danger. And this is a classic strategy of non-banking financial institution. And this, again, the questions of ethics here. Because is it right if we are creating a systems of moral hazard when the business is getting so big, employing so many people, to the level when they can put state at hostage? The state has no option but to always help them, to bail them out, to the level that it may give so many loss to the state, just because this company keep doing risky policy without necessarily adjusting to their risk management. And this is one of the issues that we need to address on a first study case. The second one, the probably a more common phenomenon that you can see, is the way how peer-to-peer lending operates, and another ethical questions, another welfare questions to the public, because this is the examples of how debt collection does exist. In bank, debt collection is so regulated. It is impossible for you to give threat, to give, to harass the borrower, and so on and so forth. But the way how this industry works is so crazy. You own the data. You usually, consumers, when they're about to borrow the money, there was a questions when they install the apps. There's a questions whether or not you allow the apps to access the contact by the magical advertisement of giving you best service. Although at the end of the day, what will happen is that it may be existing a situation when they can just broadcast in information to the contact you owned, saying that you are now in debt, which is again a very big problem of ethical questions, especially on privacy concern. But due to the issues of they are not banking system, they are not well regulated. So we need to again question whether or not these groups are benefited. The poor people, the middle class are benefited by this. Because unfortunately, in many cases, non-performing loan is getting crazy. They might be able to purchase the goods, but they are not really getting their welfare. They're just happy getting a temporary happiness on their consumption, but they get extra burden to pay extra in the future. And all of those things do not allow them to escape and to climb up on the poverty cycle. And most dangerously, the situation oftentimes only benefit the top elites. And therefore, in many cases, usually, for example, in case of venture capital in the United States, only 3 firms like controlling almost 70% of the transaction in stock trading. One of them is BlackRock. So what I'm trying to say here is that the control of this in terms of oligarchy is huge. So the term of financial inclusion is not necessarily true, because rather than it includes the people, more important, but what happens is that it's owned by the few, and they use the terminology of inclusion in order to get away from many strict regulation. And that is the question that again we need to discuss. The third study case that we are talking when we are talking about financial inclusion is, of course, an application for you to manage your fund, be it to play on stock or in money market, crypto, and so on and so forth. Again, due to lack of regulation, the situation is crazy. I'm going to talk a bit about cryptocurrency. The situation is so crazy. You can get poor in an instant, you can get rich in an instant, and if you're doing that, basically it's a major gamble. And there are so many people who get depressed, frustrated because of this loss and gamble. What is so unique again is that cryptocurrency is basically illegal in many countries, even in Indonesia. However, there are so many apps that advertise you to be able to play cryptocurrency in a giant billboard, but there is no regulation and there is no law enforcement to do that, which again spark questions of the lack of regulation in this non-conventional financial industry. I think China is a country that China and India, particularly China, is a country that is declaring war against this industry, especially cryptocurrency. That's why they do massive crackdown. There are so many cryptocurrency miner in China. It used to be the largest cryptocurrency mining source in China. However, they are being cracked down. They are being persecuted because not only it is creating environmental hazard because it's consumes so many energy, but also the government believes that when it goes uncontrolled, cryptocurrency can also hamper and can also disbenefit the state. And the state with moderate and low risk tolerance believes that if this risky product is too big to handle, they do not want it to get big. Therefore, they do crack down on this. United States is basically the example of quote unquote free market. Basically, you can do anything. And this is the examples is Robinhood. So in Robinhood, you are equipped with apps. You can play stock as much as you want. What's crazy about these apps is oftentimes is that you are even allowed to have negative balance, which means that say you are investing in 1 million rupiah. If you play in many other apps, your maximum loss is 1 million. Because if you lost 1 million, then your investment is done. But what happened in this industry and in these apps, and even can be played by teenagers like us, is that you can take loans and negative balance. Some people can sleep, and when he wakes up, he lost, and his balance is negative $700,000, which is so crazy. In this apps, you can get so many profit at the same time you can get so many loss, and this is the craziness of the industry. Usually, country with the moderate risk tolerance have regulation in money market. For example, Indonesia is quite known as as a more risk averse and moderately risk tolerant. For example, if you play stocks in Indonesia, the maximum gain per day of your stock price is only right up until now, if I'm not mistaken, is somewhere around 7 to 9% per day. So if the value is 100, it can go only up to 107 in a day. It can go again 7% in the next day, and so on and so forth. The same one with loss. So if it's 100, the maximum loss is 7%, so it goes to 93. So it may go to 86, and so on and so forth. So there is cap between the top cap and bottom cap, making sure that people are not gaining crazy, but are not losing crazy. US is not doing that. The good study case, the example would be GameStop, right? I'll give the example of GameStop later, but this is the example of how when you are not having financial limitation and no regulation, you can go crazy. Like when 20 years old, someone that is as young as us dies by suicide just seeing their negative 730,000 negative balance in a knife, which is so crazy. But what is even worse is that there are so many examples of how the gain and the loss is beyond control. The good examples in the study case that you might have seen is the GameStop. So this company is the traditional gaming brick and mortar, where you can purchase game in the store. And because the trend is getting more digitized, in PlayStation, you are installing the apps downloading the apps rather than purchasing the actual CD, the actual hardware. So it makes this type of shop generating loss every year. So what happens is that there's a hedge fund company who short trade them. So they play in a market forecasting that this company will getting lost, and the more the company getting lost, the more money they gain. And short trade and this system, short listing is a system that is allowed in United States, a system that is not allowed in Indonesia. What happens is that gamers and many GameStop sympathizers are getting angry. So after they get angry, what they do is that they immediately purchase GameStop stocks because there is a surge in demand, and then the price of GameStop suddenly increase, making the hedge fund company who bet against the GameStop getting so many loss to the level when they stop operating on this. And so this is like a crazy loss. The price is getting high, even to the level when some of the trade was too high, to the level when Robinhood themselves stop the trading at that time. So Robinhood, that is so risk tolerant, that is crazy in risk, even stop the trade because the trade is so crazy. So Robinhood stopped this under the pretext that this is malevolent trading. This is the manipulation, considered as manipulation. But this is so problematic because there are so many allegations when Robinhood is doing this, because there's a lobby coming from the Melvin and Co, the company who had the hedge fund company who bet against the GameStop. Therefore, Robinhood is doing this. So Robinhood is not pro people, and there are so many debate against this. Many trader getting lost in that day because the value decreased by 36% after Robinhood stopped the trading, and all this craziness is so big, is so huge, and that is a consequences of lack of regulation and the free trade system that is operated in non-banking financial system. So then what will happen on this situation is that, of course, we are afraid that this is just one example. But what if this happens in so many cases? Because the increasing trend of non-banking financial system, we are afraid that the same bubble might exist, the same issues exist, and this is the trouble that we need to consider when we are talking about financial inclusion. Another study case that is exciting is, of course, talking about IPO, right? Because the financial inclusion, we are talking about venture capital. Venture capital invest in many companies. You are usually called a startup or whatever we want to name them. When this company usually primary strategy is not to gain the conventional profit-seeking method. Profit-seeking method means that you need to work on a healthy business proposal. So you sell 100, as your capital is 100, you need to sell to 100, for example, so you get the profit. And you cannot spend more than what you earn. Basically, that's the conventional system. But the strategy of many company right now is not. The exit strategy is IPO. It's valuation. So you can bleed now, maybe you bleed for 10 years, and after that you sell your stock in the market, and your perception and the valuations of the company is super high to the level when you gain the profit later, and it becomes the exit strategy that is favorable by many company. And usually venture capital is the one who invests this, because conventional bank will never invest in this type of business model, okay? Because of the high risk. How high is the risk? In 100 company who is claiming themselves as startup, the failure rate is 96%. So you only get 4. According to many venture capital, that's okay. If I only get 1 out of 100 failed investment, if this one company valuations is 200 or 300 times larger than how I invest, they can still get profit from another 99 who fails. So that is the principle again of the IPO. Now, we need to see on the examples of the dilemma that exists, right? The first study case on the IPO will be when the valuation is not good because either the market is rational, the market is irrational, and the market is easily rigged by the systems of valuation. Valuations is designed by so many metrics, oftentimes can be arbitrary. So if we talk about how valuable I am as a person, of course, every individual has different perception. Maybe a person says that I am valuable, so valuable because I am handsome. Some people say that I am ugly, so I am not that valuable. Some people say that I am tall. Some people say that I am smart, so I am valuable. Even the differences between smart, how intellectual capability and physical attractiveness is different to many other perspectives. So the principle of free market believes that the market will create an equilibrium of it, will create a balance of valuation. So they create the perfectly rational calculation on it. However, what we need to see, there are so many study cases where the company is apparently failed to create that. Theranos is the example. So Theranos is basically a pharmaceutical company and also a research company who focus on advanced medical research. What happens in this is that they are perceived to be the next futures of medical industries, until it's proven that the report and all the research that the founder shows is a fraud, and it is unknown until it's too late when so many people have been investing in this company. The second example is GoWork. It's basically a co-working system that gives that reports a high amount of transaction value, despite the fact that finally close to the IPO, the value depleted very high because it's known that the company is incapable to provide a transparent data provision. During the process, many people have been investing a lot on this. And this is the problem, because apparently market is not rational. Individual is not rational. Individual purchase and sells things based on trend, based on perception, based on endorsement, and all of those things are oftentimes made impulsively rather than carefully. So the situation is getting hard because it's very hard for us to predict who will have the next valuation. We thought that Yahoo has a very high value until we realized that finally the value is almost nothing. Snapchat was also the same example, because the product that is based in accordance to value is oftentimes and many times cannot fulfill its promise. because we failed to really put an objective valuation upon the product. So this is a good study case for us to understand that the process of valuation might have issues, to understand how rational the market is. And this is the problem that we see on the IPO process. Then what about the quote unquote successful one, the merger of Gojek and Tokopedia that will soon be open for public? Of course, we as a rational, as a general audience, if you are being questioned, say that you have money, are you going to invest in it? Are you going to put your money in it? Maybe the answer is yes, because they seem to be huge. Gojek is the top two, maybe the top two in Indonesia after Grab on ride-hailing apps. Tokopedia is the largest, if not top two after Shopee and etc. When they merge, the value will be huge. The even government of Indonesia themselves and there are many research industries predicted that they contribute 2% of the GDP. It's a huge number, and they employ so many people, contribute so many economic contribution among people. But then we need to see again that the situation is that when they are merged, then basically the type of business that works is an oligarch. It's a conglomerations of business. So what they do is that they rather than focusing on the primary service, for example, of ride hailing, they expanded themselves into non-banking financial service, into many other especially financial institution. That's why they have now Go Finance. They are now in focusing on their digital currency and so on and so forth. And all of those things indication that they are building a conglomeration, a process when they are getting again super huge to the level when they can have a huge bargaining powers toward the market. Therefore, what happens after merger and after merger between Gojek and Tokopedia, what happens immediately is that the incentive service for the driver is reduced again significantly after their price is already, if their incentive is already reduced several months beforehand. And they don't really care about the driver because the driver has no option now. If they are now in debt of their of owning the motorcycle or the car, that they are still in debt, and they have to pay the installment, so they cannot quit. They cannot protest because most of the workers are not unionized. They have no strong power to unionize. Even right after they do protest, the protest means nothing. And it becomes race of the bottom because the rest of the industries also repeat what they are doing. Shopee Food does reduce the incentive. There are many logistic company who reduce the incentive for kilometers, which again makes driver have no option but to bow down to this. This soon might happen again to the commerce, for example, where the tenant must pay must pay extra for Tokopedia when for many services they provided. If they are very huge, people have no option but to use them. So again, the process of this means that they bleed in order to gain the market share, in order to do predatory pricing, in order to eat the market, and after that they control the market, so they have a huge power in order to design the policy that they want to do. This is basically basically a questions again we need to consider when we are talking about financial inclusion. Okay, so the last example that study case that that I'm going to show is how China again is cracking down on shadow banking, basically on applications on many apps, on many platforms that give credit. They do crack down for almost $1 trillion, a huge investment. Sorry, a huge number. But again, this situation means that the approach is quite unique because China used to grow the shadow banking as the alternative of conventional banking. But once the shadow banking gives high risk to the state by non-performing loan, by investing in risky businesses, they crack them down. So it's a quite interesting example for us to understand how state operates differently. Some state operate in moderate risk, but giving relatively low enforcement. Some countries give a very high enforcement and cracking down industry that is deemed unconventional. Some countries give and open up the market so large as the United States in order to ensure that this industry can grow and can grow as big as possible. Which one is the best one? Definitely, it's a questions to debate, and this information is not meant to judge, but that becomes an important consideration for you to consider and to know more, and might spark your interest to research more about financial inclusion. That is the material that I share. Thank you very much. I'll return back to moderator to start if we have questions in the session.
Yes. So, guys, if you have any questions, you can just unmute yourself and ask away. So far, we haven't received any questions from the viewers in the Zoom. I can say it was a half a matter one. Yeah, sure. Just unmute yourself or you can type if you're shy.
Okay, hi Kak, I'm wondering why the state refuse to regulate this non-banking institution or system more tightly, or why they don't have the incentive to do so, knowing that there's a huge risk that might happen if the state does not regulate more
Okay.
tightly.
Okay. Interesting questions. So the question says the state behavior, state psychology, why the state doesn't regulate it either. I think the easiest answer will be simple. If the state limits this, it means that the state will endorse the financial industries to be conventional. So they expect to have more bank in that indirectly. They want to endorse individual to participate in conventional banking. So we invest in deposits, in real economy, and then people make a good business proposal, and then they do conventional business. The reason why the state opens up and less regulate this, because one, if they regulate, then there will be no interest from non-banking financial institution, and we are facing a tremendous pressure, definitely, because non-banking financial institutions are now becoming the major trend, where the private when the asset owner or those who have money, basically the top rich, do not know how to spend the money. So and they do not want to gain just the moderate margin. So they want to gain high margin by reallocating their money not in the conventional business but in non-conventional one. Okay, so what will happen in this situation is that, but the problem is we need to understand first the situation where the capital circulation is already unfair. Right now, the private contributes 80% of capital circulation and state only control 20% of it. So basically the private is 4 times richer rather than the money owned by the state. Okay, in this situation, of course, especially, and the figure might be even larger in state with low state ownership, with low taxation and high private ownership. This situation means that the figure might be even more tragic. So what will happen is that right after the figure is already imbalanced, the state has less bargaining power. When there is an influx of this, and when they want to compete against other countries, less regulation becomes the shortcut for it. So they make it easy for you to invest in less conventional way. Therefore, non-banking financial system do exist. And finally, under the hope that it creates trickle down on economy, which unfortunately is not, well, some may say true, some may say not. If they do regulate, then of course it depends on the positions of them. If they are excited and they are attracted to crack down and to reduce the contributions of non-conventional financial institution, then they can do. but at the expense of maybe lower capital circulation. And this is the dilemma that they have to face. Therefore, the questions exist. I think that I think in this situation we need to really see on the character of the character of countries, whether or not they are strong in real economy. Many countries are now doing premature deindustrialization. So what they do is that when they have yet maturing their industrial process, but they deindustrialize. They shift their business to service industry, and from service industry to financial service. And what they do after this is that, of course, the impact is even lower. The impact towards the consumers is even lower, because usually when it's a heavy industry countries, usually the money that is circulated towards the surrounding, towards the workers, towards the facilities inside the workers are larger, rather than when the business is financial service, because financial service is oftentimes not benefiting the the lower pole of society. So, but many of the countries who want to get easy trajectory because they don't think that they can compete in industrialized position, shift it into financial service, and therefore they do it. Indonesia is the example. Indonesia has yet achieved the industrial state, but they do massive deindustrialization since 90s. And massive industrialization means that they have to gain capital from financial services, and that becomes the trajectory that they still uphold up until now. I hope that my answer enlightened you.
Awesome. Thanks, Kak. May I ask a following question?
Yeah, sure.
No worry. No worry.
Then what does it take for a country like China and India, and why do they have the incentive, even if they don't have the same safety net?
Okay, China might be quite a unique case because China has the largest reserve cash in the world. Therefore, they are not necessarily afraid of cracking down the crypto industry that is quite small. So basically, China is quite a unique case. I think India. I think India is a country that is dependent upon foreign direct investment, but I think they focus still on industrialization. That's why their economy is driven by their industrial process, the industrial economy, rather than financial service. If they want, even when in the service industry, they focus on real services such as electronic services, services such as cloud headquarter, when their worker is doing the customer service job, accounting job, and etc. So they still focus on the real economy. There are many factors. One of the anecdote is that China starts cracking down right after one village and one area in China has the electrical shutdown in an instant because of the high frequency of energy consumption from crypto mining. In crypto mining, basically what they do is they use computer to mine the data, so they spend electricity there. And the reason why China is chosen because China is full of coal, so the electricity price is so cheap. Therefore, the money that they earn from the mining, from cryptocurrency mining, is larger rather than the cost of electricity. Some of them is even free because the electricity is paid by the state. So this is quite funny. And right after they know that one village electrical shutdown is caused by it, then China starts to do crackdown. Secondly, China and India believe that cryptocurrency's impact is unknown. They are afraid that the users, if the citizens of their own country consume do transaction in it and have major loss, and it impacts to the welfare of the society, the macroeconomy. So they are afraid of letting it happen. More importantly, on the cryptocurrency is that cryptocurrency is prone for illegal transaction. When in the process, when the peak of cryptocurrency, especially Bitcoin, the number of transaction of illegal trading, including drugs and sex trafficking, using cryptocurrency is increasing significantly. And this is hard to monitor because cryptocurrency, yeah, basically in cryptocurrency, you can put some whoever's name. It's not a conventional trading. And this is dangerous because then one drug dealer and sex trafficker can use crypto to make their trading safe, then there is a huge cost on this for the state. Therefore, China and India decided to crack it down. I think that because of their nature, when they have a very strong industrial power, so they are not dependent to this financial service. Secondly, the government is more risk averse and they believe on the fundamental process rather than the market prediction. This creates a policy, and it drives their psychology to make that policy. And I think the impact, especially China, is very huge. When China cracks down with cryptocurrency, Bitcoin price falls tremendously. I think this is the largest factor after Elon Musk tweet, and therefore this is an indicator how volatile the business is. And yeah, this is what happened in those countries.
All right. Thanks so much, Kak.
Oh, are there any other questions? Going once, going twice. I think there are no other questions. So thank you, Rifan, for your time and your knowledge for sharing with